Welcome, everybody. You've got Harvey, Migotti, and Gareth Brown from the Forager International Fund. We're here to talk a bit about some new stocks that we have in the portfolio, and also just give you a quick recap of what was happening over the last quarter. As you might have seen in our results, it was a pretty good quarter. We had broad-based performance across a variety of stocks, whether they're growth, value, etc. A lot of things were working well, particularly in June. Gareth, maybe you can talk to us a bit about one of your growth stocks that has performed well over the recent months.
Sure. The one that's done best for me and one of the better ones in our portfolio over the last sort of 3 months was Neo Games. Neo Games makes software systems to run online lotteries. The main part of its business here is now in the US. They run the online lottery for 4 different states in the US. The market over there is very nascent. So we have one state, Michigan, which has been going for 5 or 6 years now, and Neo Games and their joint venture partner have run that for about 5 or 6 years. And that's sort of followed the lead of what we've seen in Europe, which is, we're up to the point now where half of of lottery tickets are sold online. So Michigan is already a very profitable state for them. It's already impacting the financials and looks good.
And remind me, Michigan, it's not a huge state, is it?
That's correct. Michigan's about 3% of the US population. Neo Games has 4 other contracts. So 3 US states being New Hampshire, North Carolina, and Virginia, and also Alberta, which is a province in Canada. So these are earlier stage contracts that have been signed in the last couple of years, and they're helping to build online businesses for those state lotteries. The population in these states amounts to about 25 million. So the market opportunity is maybe 2.5 times what you've got in Michigan already. And again, we are seeing that scale very quickly. So Virginia, for example, is a state that had these strange rules around online lottery purchasing. So they had an offering prior to 2020, but you had to be in a newsagent or on a physical site using Bluetooth to buy it online, which is kind of pointless.
Yeah, that's totally pointless. It feels like
they moved to an open model in July last year, and by Christmas it was approaching 30% of the lotteries business was online. Mm-hmm. And we're seeing that already in the Q1 results from Neo. They're making a lot of money in these states, but there's still a long way to go, even just from those four additional contracts.
That's excellent. Okay. Well, it sounds like plenty of runway here, and the stock has obviously done well, pared back a bit over recent months, but given the growth in the end markets here,
I think that's the key bit here. When we bought this at the price we bought it, we had Michigan, we had these 4 other state contracts lined up, but there's a huge runway of opportunity here. So in the US alone, there's 47 states run lotteries, and 9 of them are online. So in 38 states, you have to go into a physical distributor to buy a lottery ticket or a scratchy. And we think that's changing dramatically. There's going to be a bunch of new states coming online. Really important lesson from Michigan here is that the sale of tickets online doesn't just recut the pie, it grows the pie.
Yeah.
So they
become simpler, right? You don't have to go to the news agent. You can just do it when you see an ad. You do it from your
younger
phone.
Crowd, and just it's a way to grow the pie. And I think the other point here is that this kind of gambling is probably the least damaging form of gambling, and it's also the one that generates the most tax revenue for state. So you look at North Carolina, for example, it's all of its proceeds go to the education system in North Carolina. So
no, it's great. Yeah.
It's something we don't feel as bad about.
And we do know that the U.S. needs to find sources of tax revenue, right? They're talking about cannabis legalization, and this is a great source of tax revenue for the states to fill the coffers up after a lot of spending due to COVID. So definitely an exciting stock that everyone keep your eyes on if you can. So Gareth, that was the more growthy end of the spectrum. Tell us about an interesting value stock that you're invested in here with our fund.
Sure. One that we've owned for a couple of years now is Motorpoint, which is a used car dealership in the UK. One thing I'm always on the lookout for is a business that when you come into crisis times, when you come into difficult times, that business not only is resilient, but can actually grow stronger in difficult environments. And Motorpoint was one for us that we felt that way about coming into the COVID crisis. They've announced some really good results. It's a tough environment. The dealerships were shut 6 months out of 12 in the last financial year in the UK.
Lots of stops and starts over in the UK. Yeah, that's right.
Sales were only down 30%, which is pretty impressive in that environment. The company started doing home delivery, a month and a half after the lockdown started in the UK. By the time we got to the end of the year, they had sold 20,000 cars retail through online ordering, and 8,000 of those in the last quarter online ordered, home delivered,
right.
At a time when dealerships were shut. Now, it's a massive contrast there with Cazoo, which is the much admired used car online dealership in the UK. It's sort of copying the Carvana model in the US. Cazoo sold 9,000 cars in the March quarter. Motorpoint sold 8,000 online in the March quarter.
Yeah, wow.
Motorpoint has a 300 million market cap. Kazoo's coming to market with a 5 billion.
Incredible, isn't it? So, flying under the radar. Yeah, that's right.
Yeah. I think that the results that came out a couple of weeks back, nothing in there was too surprising. They were good results, but nothing in the results themselves were, I guess, unexpected. What was interesting was they announced some new strategic initiatives, which is to grow the business significantly over the next 3 to 4 years.
Yeah, remind me what that was. It was almost a doubling over the next couple of years, right?
Yeah, so if I had any criticism of management over the couple of years that we've owned it, was that they're paying out too much of the cash flow to shareholders via buybacks and not investing enough in the business. It's a huge incremental return on invested capital opportunity. So you want a business like that to retain as much as it can and to grow. The new strategic initiatives really address that. So they are planning to double their dealership base over the next 3 or 4 years, with the new dealerships really geared towards online ordering, home delivering, not necessarily the huge hypermarket stuff, but doubling the dealership base. And they want to double sales from the pre-COVID levels. So they sold a bit over $1 billion in 2020 financial year. This year it's down to 700. They're aiming for 2 billion pounds of sales, 3 or 4 years down the track at, good margin. So, we should see significant growth from here. And I think the growth plans they're quite aggressive, but they are achievable. And I don't think they need to issue shares. I don't think they need to borrow money to do it. They can do it all from retained capital. So
yeah, it's always puzzling when this is probably our least liquid stock that we have in the portfolio, and it's always puzzling when a company that has a small market cap chooses to do heavy buybacks, or not heavy buybacks, but deploy a significant amount into buybacks rather than trying to grow the business when the returns are so attractive. So it's great to see that shift.
It's also a cultural difference between the US, where you're spending most of your attention, and the UK generally, I think. And Australia falls into that sort of same bucket as the UK there, where people want to see dividends and cash returning to shareholders. But I think they've just got they've provably got a big opportunity to reinvest capital at good rates of return. Really,
and the market's rewarded them for that move, hasn't it? The stock went up quite decently after the results.
And it was really on that. It was really on that strategic initiative piece rather than the results, in my opinion.
Yeah, no, 100%. Yeah. Excellent. Great. Well, that's another one that, should bode well for us over the coming year, hopefully. So, that falls into the value category, and we've seen value stocks hold up pretty well over the past couple of months. Yeah. The whole year has actually been somewhat of a rotation from growth into value. But, in July, we saw a bit of a sell-off, both across cyclical names and also in some of the more growthy names. I think the first half of July was, a big drawdown in the small caps in particular. So, what are your thoughts there?
Well, it's been a tough early July. We've given up quite a bit of the gain from the month of June. I think, we've played it relatively well, though, despite the fact that it's down a bit. I mean, the reality is we can always do better.
Yeah, there's always ability to optimize, and we continue to try to do that. I think one thing that we did well, both in Neo games, where you sold almost half of our stake, and much higher prices after it had a big run and it hit $70, and we did that across the board in some of the names that did really well in the first half. So I think we managed that really well, and this has actually given us an opportunity to buy back into some of these names that got a bit beaten up, and we still see a tremendous story here over the next 12 months. Whether or not you get a COVID Delta wave, or you do, there's a lot of idiosyncratic names in there that should do well across various environments, and it's given us an opportunity to top up some of those over the past kind of week or two.
I think that's the key there, Harvey, that it's the ones that were performing so well for us in the back quarter of the year that have been hit the hardest here, but we've really taken a lot off the table. So yes, we've been hit by it, but we've taken a lot of our profits, and we're in a position now where we can add to these stocks if they get cheap enough.
Exactly. Yeah, and we've already started, so it's all these opportunities. I always like them 6 months from now, but it's always hard when you're staring them in the face. So
what about so that's from the old order book. What about new ideas? I mean, it's a new financial year, and it's always a time to sit down and think, have we put our resources in the right area? What sort of stuff can you reveal there without giving away too many names?
Yeah, so we just invested in a company in the online advertising and programmatic buying space. They're particularly focused on video, and digital video is the fastest growing area, arguably, of online advertising. Driven in part by connected televisions, but also just online video in your browser and on your mobile in particular. So it's a name that's trading at almost half the multiple of its peer group. It's been flying under the radar for most investors. People only initiated coverage on this stock about a week ago. So we're very excited about that one, and we're going to be doing a write-up in one of our upcoming either monthly or quarterly reports. So I think everyone should keep their eye out on that, because we think it's an interesting opportunity in a very good space, trading at a reasonable valuation, which is not easy to find, right? So we're excited about that.
I think more broadly the 2021 was hectic. Let's put it this way, and I think at some point that calms down, but we are still looking at fresh ideas almost daily, and there are still things that are attractive. So hopefully it bodes well for the rest of this year and beyond.
Sure, 100% agreed. Thank you, everyone. Thanks for your time.
Thank you.